All right, this is the weekend update. It is September 8th, 2019. I apologize for getting this video out so late in the weekend. Usually I try to get it done Saturday, sometimes Sunday before the market opens. I apologize. So I had to attend a wedding. It wasn't a family wedding or anything. I was just expected to be there and I forgot about it. So I had reorganized my schedule Friday, late Friday, and needed to push things back. So again, I apologize. So I was out all day Saturday and wasn't able to complete these videos. So here I am. So let's go ahead and start with the daily time frames. And we're going to review a few things that happened last week, some follow through, and also we're going to go all the way down to maybe the 30-minute and the 1 hour chart to see what might be available right now as the market's opening. So I'm going to start off with the dollar yen. And if you're new in the group and in the chat room and with the coaching, all of that, if you're new, I'm going to mention a few different trading strategies that I use. I develop these methods, and they may not make any sense at first. So I would recommend getting into the membership area, and then there's 13 different modules. So each one of the trading strategies that I'm going to talk about, there is a dedicated module in there for that specific trading strategy, and then there's multiple videos and different scenarios around the news, larger time frames. There's some worksheets, checklists, and some general manuals that you can actually download. They're PDF, and they'll help you. They'll help you get a better understanding of some of these techniques that I'm using. And then when we're in the chat room, I talk about the techniques as they're developing. So you can watch the videos, get a pretty good idea of what's going on, but then watch me trade it in a live market, and you can actually trade it with me. So I help you execute those trades. For those of you who are in it, you already know that. That's what your expectations are, and that's exactly, you did the right thing. I mean, you came to the right place if you're looking for somebody to help you. Not necessarily help you with other people's trading strategies, because I can't do that. I don't know other people's methods, but I know mine, and I know how the market works, and I know the system that I've been using for the last 18 years. So I learned from people like John Bollinger and some of the other professionals in the business back when I first started in 2001. So a lot of these strategies come from a lot of the material and the teachings that I picked up from these individuals. It wasn't like I just went to a website and started using some of these random moving averages to see if they work. These are really all based on uh, the basic principles that we all know of: support and resistance, whether it breaks out, whether it reverses, trend lines, all of that. It all kind of comes together, and it works on every basic market with basic market price structure. It's always been in place. It's always been there. It always will be there. And it works really, really well. So when I start off with the daily time frames and I see some of these techniques set up on the daily time frames, I really pay attention, because sometimes they really give me a good opportunity to identify what's likely to happen next. I started off here with the dollar yen, and we're looking at the daily time frame. And what we have here a couple of days ago, and this happened on Thursday, this was a continuation breakout trade. It didn't clear that price swing high here, but what settled and what started this W bottom pattern here was the low from August 12th. And you can see at that point I had a resistance point and I had a support level down here. I removed the support because it didn't really matter at that point anymore. But once we had a closed completed candle above that resistance, which is the center point, I couldn't really use this one because it really wasn't the center point. I have to respect the overall price swing low, the sharp retracement, and then everything just more or less went sideways. You can clearly see that. I'll open up the charts here, one more click. So this is the level that I'm using. This is the resistance. This is August 13th. So at this point, everything went sideways, and it was inside of this consolidation range. We had this head fake down here. We didn't trade that. We didn't get trapped into going short. We waited, and again, just Thursday, we had this closed completed candle above that high. So the high of this candle right here, let me get rid of that. The high of that candle from August 13th is 106.96. This is how I set up this continuation breakout trade. This is the daily chart, dollar yen. So this candle closes at 107.06. So again, the high was 106.96. So this candle closes above that high. That was the high of my resistance in this W bottom pattern here. And then at that point, this is the continuation breakout trade. This is the signal candle. So I'm going to review this real quick. The signal isn't necessarily my entry. The signal just gives me the opportunity to start looking for an entry, and it also indicates to me or helps me identify a possible breakout and a breakout and a trending move that follows after the breakout in the direction of the breakout. But there's a few things that I need to confirm. I'm going to go to the yen futures and I'll show you how this all played out. So I'm going to open this up one more click. I'm going to put my crosshairs right on that signal candle. And you'll notice that the first thing that I can look at, the first thing that I look at, and again, I developed this method back in 2001, and it works like this on the 1 hour chart. It works just like this on the 4 hour and the daily. I don't use it on any time frame smaller than the 1 hour chart. I'm not going to get into the details of why it doesn't necessarily work on a 30-minute or a 15. You can see all of that in the videos in the membership area, or if you've got a question about it, I can certainly answer it. I just don't want to stall right here and go all the way down these little rabbit holes about all the details, because I could be talking about this for like 2 hours. I did a lot of work putting this method together. It really was a very time-consuming process just for me to piece together this one particular trading strategy. So the first thing that I'm going to look at is the Bollinger Bands. The Bollinger Bands need to be separating away from each other on that closed completed candle, and that shows me a sign of strength. When I see the Bollinger Bands separating away from each other and I see the signs of strength, I would expect that when price takes out the high of that signal candle, that it's likely to continue trending in the direction of the breakout. If the Bollinger Bands were not separating away from each other, let's say the bottom band was pointing straight, in this direction towards the highs, and they were both pointing in the same direction. Let's say the bottom band and the top band and the bottom band, if they were both pointing in the same direction, that to me, in my mind, is divergence. That means that it's not likely to work. It means that there isn't a lot of momentum behind that move. That's what it means to me. Different people interpret and take these Bollinger Bands and use them in different ways. And the only thing that I'm sharing with you is the way that I do it. It is not, what I'm saying does not mean that it won't work any other way. I'm not saying that. It's the way that I learned Bollinger Bands. I went and I attended John Bollinger's weekend seminar in Los Angeles years ago. I bought all of his books. I bought all of his DVDs. I did everything that I could possibly do to learn from John Bollinger and use his Bollinger Bands, and then use it the way I was comfortable using it. Meaning that I then took that tool, that indicator, and then turned it into a trading system for myself. And John Bollinger talks about this all the time. He talks about how he'll teach people how to use the Bollinger Bands. He developed it. But people don't usually use them the way he teaches them. When he goes, if he was to run into them later, a few years later or whatever, they'd be using it in their own way. And that is exactly what trading is all about. There's nothing wrong with that. So when I say that the Bollinger Bands need to be doing certain things for certain candles and signals for me, that's the way that I use it. It's the way that I developed it. And again, I've tested this method over the last 18 plus years, and it works like this all of the time. So let's get into it. So the Bollinger Bands need to be separating away from each other. If they're not, it is, in my mind, divergence, which means that it's not likely to continue to move in the direction of the breakout, and that it's likely to come back in and form a head fake and probably stay back down here inside of consolidation. That's what it means to me when the Bollinger Bands are not separating away from each other on that closed completed candle. Now, I use this phrase a lot, and I say this all the time in the chat room. I've got to wait for this candle to close. I cannot start making any kind of judgment, assessment, analysis, predictions. I can't do any of that until this candle's closed. When I was putting together this trading system, I was using this on a 1 hour chart, and I was still making mistakes, and I was still experiencing losses because I was getting in when the candles were still open. And very often they would just be head fakes. They would clear through resistance and then come back down and close and remain inside of consolidation. And I would end up with a head fake, a failed trade. So I had to figure out ways to prevent that from happening. So again, the Bollinger Bands absolutely have to be separating away from each other when this candle closes above resistance. Period. That's the first indicator that I'm going to look at on a chart like this. Now, this is actually the template that I use for trading breakouts. These indicators are the key indicators that I use to identify and confirm a breakout. I'm going to show you another indicator, which is really the Japanese yen futures that I use for confirmation. We'll look at that chart in just a moment. But again, this works the same way, the same pattern, the same structure, the same three indicators. Time, the setting is different on the CCI on the 30-minute 1 hour chart. I use 14. But on the 4 hour And the daily chart, I use the 20 setting on the CCI. Everything else is standard. It's just default settings. So again, at this point, I see a close completed candle. Now, another thing that I did as I was piecing together this trading system, and this is just going to give you a little idea, a little history of how I put together this continuation breakout trade method. It was a step-by-step process. The first thing I needed to do was figure out what is consolidation, right? It's really subjective. A lot of people would use different levels. Some people would maybe use this high or that high, and I needed to figure out how to quantify consolidation, at least, again, for the way I could comfortably see consolidation, and then try to figure out where the breakout candles were that would lead to the breakout and the trending move in the direction of the breakout. That's what I was trying to figure out. Because sometimes you'll use a smaller range inside of a consolidation like this, and you'll disregard all this information over here to the left. You'll use something more immediate, and you'll use a high or a low, and you'll say that this one, is low, that's a high, and then you'll get a continuation breakout or a candle that breaks out of that range, and it'll come back down inside a consolidation, and it's just choppy. That's what was happening to me. I couldn't figure out which one was the right level. What is right? There's so many different ways to trade. There's nobody there to tell you unless they create a system around it, and then they share that system with you. So that's why I'm giving you all these details. I want to make sure that you understand exactly how I'm thinking and exactly how I see this if you want to execute these trades. Now again, in the chat room, I go through this step by step. We review this every single day. We go over the basics and over the basics all of the time. And then when I get a continuation breakout trade, I call it out, and then I tell you exactly where the entry is and exactly where the stop and the targets are. And then I stay in the chat room and we manage it all together. We all make money on these trades. We have a signal candle. I can't get in on the signal candle. I started getting in on the signal candle, and then the trades would come right back down again. That was the next step after I figured out where consolidation was waiting for the close completed candle. So when the candle would close, I would get in and I would go long thinking, okay, this is a good one. This is going to continue to go. And then it would reverse and come back down inside of consolidation. Again, another head fake. And I still needed to figure out how can I prevent more head fakes, more of these different head fake situations. I know the first one, the Bollinger Bands, if they're not separating away from each other, that would lead or could lead to a head fake. The next one was, I was still getting in when the candles would close. Those were sometimes leading to head fakes. So then I came up with this other solution that I learned from John Bollinger. And he talks about waiting for, let's say, reversals or breakouts or signals. And he waits for the candle or the reversal, the signal, for the high of that candle to be taken out. Or in a downtrend, the low of that candle to be taken out. Where price then resumes, and you would expect it to continue at that point. So what I did is I came up with this idea called the 3-pip entry. So when I get a signal candle and it closes like this, I then have to identify the high of the signal candle. And in this instance, the high was 107.22. You can see it right there on the screen. 107.22. So if I use a 3-pip entry, I can't get in until 25. And I don't know if it's going to let me drop. There we go. 25. That would be my 3-pip entry. And you'll notice on the next candle, I did not get my 3-pip entry. So I waited. And if this was a 1-hour chart, this would be 1 hour, this would be 2 hours. Sometimes I wait 3 and 4 hours. And then if there's economic data, let's say this set up during the London session, and there's economic data during the New York session. Sometimes the New York session will push price right up through the 3-pip entry. Then I get in and I take it to the targets. When price takes out the high of that signal candle, if there is 100% confirmation on the signal candle itself, then I would expect that when price takes out the high by 3 pips, it's going to continue to trend in the direction, and that's when I get in. So you'll notice this, if it never goes up to the 3-pip entry, then I never go long. And if it turns into a head fake and it comes back down inside a consolidation, that's what keeps me out of trouble here, is this rule, this 3-pip entry rule. It took me a while to figure that out. What I started off with was like a 10-pip entry. And then I was waiting for price to go 10 pips higher. And on a 1-hour time frame for day trading, this is again this is a daily chart. So we're just starting here with a daily chart. I'll show you what it looks like on a 1-hour chart. But on the 1-hour chart, I was using a 10-pip entry, and it was eating into too much of the profits at that point. I realized that I could cut back. So I went from 10, then I tested it out for a few weeks and months at 7, and then 5, and then 3. And then at 3, I figured out with the daily average trading ranges, based on the breakouts and how far it travels after the breakouts, with the 3-pip entry, I knew I could always hit that 55-pip take profit level. And of course, I scale out at the first 20 along the way. So I'll show you what that looks like on the 1-hour chart. So this is the setup for the continuation breakout trade. So let's go back to the signal candle. The signal candle, the first indicator, as I mentioned, that I look at is the Bollinger Bands. They need to be separating away from each other, and they are. The next indicator that I look at is the CCI. There cannot be any divergence on this CCI indicator, and there isn't. There's no divergence on this CCI indicator. So now we've got 2 out of these 3 indicators that I use that are giving me the go-ahead, right? The green light. I've got 100% confirmation on each one of these 2. Bollinger Band separation, no divergence on the CCI. I would have liked to see the Bollinger Band separating a little bit more, but you can see it was sort of tracking a little bit higher prior to that signal candle breakout anyway, but it's still there. It's still giving me the confirmation that I want. And I still have to wait for the 3 pip entry. So if it never works and it never goes any higher, the 3 pip entry keeps me out of trouble and I avoid a head fake. It's possible that the dollar yen could return back inside of this consolidation. So again, this 3 pip entry keeps me out of trouble, especially if you use it on the 1 hour time frame for day trading. The next indicator is the MACD histogram. The MACD histogram is set at the standard default settings, 12, 26, and 9. I don't change it. I used to customize all of my indicators every time I had a trade. And I would get in there and I would change the settings, and it was a mess. It was like, if you're doing something like that, stop doing that. Go back to using the standard default settings, even though you might be a little bit uncomfortable with it, and then try it out for a few weeks and then see what your trading system and the results, see what it's giving you, see what you're producing. What I figured out was that if I'm changing the parameters and the settings all of the time, every other trade or every trade, then I don't have any data to go back in and analyze. I was trying to analyze the effectiveness of each one of these components for each one of these strategies that I developed. And it took me a long time. So it was a very scientific approach, and it's time consuming, but that's what it all comes down to. That's the only way to figure out your own trading system. It's not likely that you're going to blindly just kind of not have any purpose, no idea of what you want to trade, how you want to trade, whether you want to trade breakouts, reversals, or anything else, and not even understanding these indicators, and not even understanding the market, and then all of a sudden you're going to stumble across success with a successful trading system. It's not likely that you would develop a trading system without knowing what it is that you're going after. And by testing things and keeping things constant for as long as I possibly could stand, even if they were failing, I still needed to continue to repeat that behavior so that I could go back and look at whatever was going wrong, figure out what was wrong with it, with the trading system, and then omit it, get rid of it, and then try to figure out some other way. That's how I developed the system. So that's why it took me so long. I did it by myself. So I wouldn't recommend doing it by yourself. It's just that I didn't have anything else to do. I wasn't going to go to work. I didn't have to go to work full time. So I was blessed with that opportunity. I'd sold a business before I got into trading, so I was really gifted in that regard. But a lot of people don't get that opportunity to do that. So again, when I share my trading strategy, if you're working full time and you don't have the time to build your own trading system, nothing wrong with that. You don't have to. But if you're going to learn somebody's trading system, whether it's mine or somebody else's, I really think that it's really important to be able to get inside the mind as much as you possibly can to understanding these different components. What goes on behind creating this system, and what are you looking for? Right? That's what you need to know. You need that insight, and inside of the chat room, I can answer all those questions. That's why it's, I think, a great opportunity for me, and I speak out all of my thoughts out loud with the microphone in the chat room because I want everybody in the room. They've probably all heard it before, but I want them to continue, to be reminded of these rules and these things that need to be in place. And after a while, you start seeing it. And after a while, you start to understand it. And then after a while, when you start trading it with me, you develop the confidence, and it's yours, right? This trading system becomes yours, and you may find some really valuable tweaks or different methods that you can add to that are your own, that might improve it, or that might just simply help you identify and see and confirm the trades. So that's what I was looking for. Again, the whole thing started off with John Bollinger's Bollinger Bands, but it just wasn't working for me the way he was describing it. I needed more. So I started using consolidation because it gave me the opportunity to box in these ranges of consolidation. That made more sense to me than just looking at the Bollinger Bands and watching them come together and creating that squeeze play. Sometimes those were still head fakes, and I was still losing money, and I didn't know where to put my stop and where my entries were. So I had to figure all of this out by myself. Back to the MACD histogram. The histogram, it is a more lagging, the way I use it, it lags more than the CCI does. So if it's negative, I just need to know that there really isn't any severe divergence where, let's say, it was making a brand new sharp spike histogram lower than everything else on that breakout. You can clearly see that this is more likely to probably roll over and go positive, which it does. And you can see it. The more I use it, I mean, I've been using it for 18 years just like this, so I can see it. So to me, it makes perfect sense, and it's acceptable. When I have 3 indicators that I'm relying on for my confirmation on this breakout trade, if 2 out of the 3 are giving me solid confirmation, I know I've got a good trade. I know it's likely to work. And I know that the MACD histogram is likely to roll over and go positive. It's just a matter of time. This one lags a little more than the rest of these indicators based on the way I use it. Again, you may use the MACD in a different way. This is the way that I use it. It helps give me this confirmation and this sense of confidence that if and when price takes out that high by 3 pips, I'm likely to see the trend resume. There is another way that I confirm the dollar-yen trades. And I say this all the time. You've probably seen some of my videos. If you haven't and you're new to this, you're really going to like this. I also trade futures. And I use the same methods, the Tech 1 trade, the T2 patterns, the continuation breakout trades. These are all techniques that I developed. I use these same techniques when I trade futures. I love trading futures. I started off trading futures. That was actually my first trading account back in 2001. I traded futures. And about 3 months later, I found out about Forex, and I've been trading both ever since. So when I get the opportunity, I'm going to trade futures, and I trade Japanese yen futures. And on that Japanese yen futures chart, when price is going up, that's yen strength. When price is going down, that's yen weakness. That's all that it is. It's really nothing more than that. It's not a cross pair. Let me show you the Japanese yen futures. This is my Japanese yen futures chart. This is what I use to trade Japanese yen futures. And I also use this chart to confirm anything that I see when I trade the dollar yen. Now remember, this is Japanese yen futures. For those of you who are not familiar with it, I apologize if you've already heard me say this a few hundred times. But again, and it's always worth repeating, right? I mean, drilling on the basics. It's just like any professional. You've got to keep drilling on the basics. So back to the Japanese yen futures. When we see price moving lower, it's yen weakness. When we see price moving up, it's yen strength. That's it. This is not paired with any other currency. It's just yen futures, yen strength or yen weakness. And when I see the same patterns, like the continuation breakout trade and some of these other Tech 1 trades, the other techniques that I was talking about, when I see the same patterns on the Japanese yen futures, then I know I have a winner here in the dollar yen. So for those of you who haven't heard me say this before, if you're new, sometimes I get the question, if I was to pick one currency pair to trade, which one would you recommend? And when I get that question, I always say the dollar yen. The dollar yen, because you can watch Japanese yen futures, even if you don't trade Japanese yen futures, I would recommend putting both of them side by side. I'll show you my charts in the setup on this page in just a moment. And you can do the same thing with TradingView. You can find Japanese yen futures on the TradingView chart program. So this is my thinkorswim platform. It draws a lot of resources from the computer. I don't know if you really want to do that, but you can. Of course, you can download a demo of the thinkorswim platform. But back to the Japanese yen futures and this particular setup. So this is the daily time frame for the Japanese yen futures. Last week and the week before, we were talking about this 3 pushes to a high method. I'll teach you how to trade and how to identify this 3 pushes to a high method. Again, I'm using the Bollinger Bands. And I learned the 3 pushes to a high method from John Bollinger. So I have a push here, I have the second push here, and the third push here. And then a strong, sharp, bearish candle that opened, actually gapped higher than that last bullish candle, and then closed more than 60% of the length of this bullish candle on the daily time frame. And then we'll go down here and look at volume. Volume is massive on this move right here. This was a clear reversal at that last third push, identifying this high. So I knew I had a winner, right? And meaning that it's likely to start setting up. But I don't know that I have confirmation. I should probably stop saying that winner thing. It's just, it was going to be a winning trade is what I'm getting at. I don't usually say that. I don't even know why I'm going with that. I didn't even go to a fair or a carnival or anything like that. But anyway, so a winning position is what I've got here. I don't even know why I said that. So we've got a candle that closed last week, and it closed below the low that we were looking at for about a week and a half after this move that reversed. This was a strong reversal signal with lots of volume. Let me talk a minute about volume here. When I see volume on this futures chart, this is real volume. These are contracts that are traded, and this is the volume level that I always trade off of. Not that particular, candle at that point, but the volume, that particular indicator is what I used every time I took a trade when I was trading futures. And when I started trading Forex, I didn't have true volume. It's tick volume. It started off, everybody was saying that it was just tick volume on the MT4 platform. And it's just your broker providing that tick volume. But when I was trading futures, I was looking at the depth of the market. This was deep, real, this was just more transparency. This was more confidence in a trade when I saw reversals or when I saw breakouts. I needed to see volume. And I was a little bit lost at first when I was trading Forex. Again, because I didn't have the advantage of looking at the volume levels. I was just looking at tick volume on the MetaTrader platform or any other platform. So then I realized that I could trade Japanese yen futures, but I could also correlate everything that I saw here in this chart, Japanese yen futures, with yen strength or weakness, and I could trade the dollar yen. And I would use the volume that I saw here on the yen futures to help me confirm a stronger move on the dollar yen. Sometimes when I don't get a confirmed move here on the dollar yen, I'm sorry, the Japanese yen futures, but I get a confirmed signal on the dollar yen, it usually ends up failing. If it doesn't show up here on the in the Japanese yen futures chart, if it doesn't confirm one of these techniques and these strategies that I use, if it doesn't show up here, then it usually isn't going to work if I was to try to execute on the dollar yen. That's how important to me, the way I used yen futures, that's how important it is to me. I need to see the same confirmation. So again, we had that high, that A high, that B low. It pulled up to, what is that, a 382? And then it drops right back down and closes below the B low. We were talking about this. We were waiting for this in the chat room each day, saying that we were going to come back to this chart and look at it. And then we finally got that closed candle last week. Volume is a little bit more than it was on the previous candle, but it's just not as high as I would expect it to. Meaning that it's slowing down, in my opinion, and it might pull back and then find another candle or another day where we get more momentum, and then we'll see more volume. And this is the Japanese yen futures. However, I do have a confirmed continuation breakout signal candle, which is exactly what I have here. The dollar yen is going to move higher when there's yen weakness. The dollar yen is going to move higher when there's yen weakness. That's my continuation signal candle breakout on the daily time frame. This is what I started off showing you and teaching you, this method, this continuation breakout trade on this daily candle. And then here on the Japanese yen futures, I have this daily continuation breakout trade to the downside, which again verifies and confirms the yen weakness. Remember, I said that at that point I have to figure out where's the 3-pip entry, and I have to wait for price to come back down and take out the low of that candle by 3 pips before I could expect price to continue and resume its downtrend. I do have some extension targets in here. We'll talk about that in another video. But I'm going to pay attention here. Again, volume just wasn't as strong as I would have liked to see volume here on this one, on that breakout. But the Bollinger Bands are separating away from each other on that breakout candle. You can see that that's happening. If I get an opportunity to look at volume, or if I had 4 choices, let's say, on a continuation breakout trade, to use 4 indicators, which one would I use first? If I could look at futures, it would be volume, period. Futures volume, not tick volume. And then the next indicator that I rely on is the Bollinger Bands if I don't have true volume. On this MetaTrader platform, on the dollar yen, I don't have true volume. I could use the volume indicator and it might give me some kind of an idea, but it is not the same. It's not the same reading, and it's not the same thing as the volume levels that I see here. So again, Japanese yen futures, you can set this up on TradingView. This is Think or Swim. I also do the same thing on the 1-hour chart. So I switch the Japanese yen futures to a 1-hour chart, and I get my breakouts. You might remember these trades here. This was on a Friday. This was on a Friday. I believe that was on a Friday. This was Friday when Powell came out with that statement. We had a continuation breakout trade here. This is the Japanese yen futures. This was a bounce off of support and a breakout, which gave me the continuation breakout trade. This was, again, outside of consolidation. You'll notice the volume levels. I could open this up. Let's see if I could just go ahead and open it up here. We'll go right to that candle so you can see exactly what it looks like. This was my consolidation range right here. That was my breakout candle. And you can see how volume just picks up and keeps moving higher than all of the other candles. This is the kind of volume that I want to see. On that breakout candle, I want to see a lot of volume. And then it continued. And this was, again, on Friday with Powell, his statement out of Jackson Hole with the Jackson Hole, Wyoming. They do that every year. In case you're not familiar with it, it's in the summertime. He released a statement on Friday, and then there was some comments about China and tariffs and the whole trade war, everything sort of hit at the same time and really drove the market the opposite direction. So this gave us the continuation breakout trade. This was um, August 23rd, and then if we go to the dollar yen chart, you know what? I'm going to go ahead and stick with this one and go to the 1 hour chart. I'm going to detach, I'm going to compress, and I'm going to go right back to August 23rd. And here we are. It's the exact opposite. And it gave me a continuation breakout trade here on the dollar yen. That's the continuation breakout signal candle. I'll go ahead and put the support level in there. You'll notice that on that candle right there, Bollinger Bands are separating away from each other. On that close completed candle, I got my 3 pip entry on the next candle. On that signal candle, no divergence in the CCI, no divergence in the MACD histogram. And it moved down, and it was all confirmed with what I saw here on the Japanese yen futures. This was yen strength when it moved up, and it broke out of that consolidation range right here. Yen strength. Yen strength means the dollar yen has to be moving lower. That's yen strength. And it worked. And it confirms like this every single time. I know I'm spending a lot of time on this one, and I really think it's important because I think we're going to get more opportunities coming up here soon. And that's why I really wanted to drill on the basics here with the continuation breakout trade. We had a signal and a breakout on the daily time frame to the upside last week, but we have not had any follow through just yet. I have to wait for that 3 pip entry. What I do in a situation like this, if I want to day trade it, I've got to go to the 1 hour chart. Let me take you to the 1 hour chart, dollar yen. And this is what we were looking at last week before we closed up the chat room. This is the dollar yen, and I have a low. This is the 1 hour chart. So I have a range of consolidation with a low here, right there, and then I have the high from last week. Let me go ahead and put another check mark in there, up there, at 107.22. So now what I'm going to do is wait for a 1 hour candle to close above that resistance point, and then wait for the 3 pip entry, make sure that these indicators confirm, and it's going to confirm what I see on the daily time frame, most likely. If, again, it does not close above resistance, then I never see the 3 pip entry based on that signal from the daily time frame, and I avoid getting in a head fake if price comes down lower. If price comes down lower, let's go ahead and measure the high. The high there was 107.22, and the low here on that spike was 60. That's not that far. I mean, it's far enough, so I may be able to use this low. If a 1 hour candle closes below this low here on the dollar yen, and I have a confirmed continuation breakout trade, then I might be likely or capable of trading it to the downside, maybe back down here to support. And when I trade the continuation breakout trade on the 1 hour chart for day trading, the target's a 55 pip target. So if this works, I'm going to earn 55 pips. That's a good trade. If you're trading standard lots, that's a good trade. that's a really good trade. So I would be waiting for either direction. If I don't get the breakout to the upside, then it's possible that it's turning into a head fake on the daily time frame. And remember, I don't get into trouble. I'm not in it. There's no reason for me to be in it because I never got my 3 pip entry. The 3 pip entry rule keeps me out of trouble. I teach you how to do this in the chat room, and you can also learn all about it in the membership area. Learn about it in the membership area in the continuation breakout trade section. Watch all those videos, download and print the worksheets, and then come into the chat room. And then when we find these continuation breakout trades, I teach you how to apply it in a live market. If price comes back down here and closes below support, then it might be a reversal, and I might get a continuation breakout trade to the downside. So at this point, I really don't know what's going to happen with the dollar yen. I know that the dollar yen printed a signal to possibly go longer, but again, I didn't get the entry. So I'm not going long yet. I have to wait. That's the dollar yen. So I'm sorry I spent so much time on that. But it really gave me an opportunity to show you all of these different components as they come together, and what will keep us out of trouble, what will help us confirm some of these trades. The other thing that I'm doing in the chat room every hour, every minute when I'm looking for a trade is I also have to try to assess the conditions and the market environment. Like on Friday, we were watching after non-farm payrolls, and it was relatively easy for me to see that it wasn't likely to go any further. Let me give you an example. So in the chat room, when you're looking for trades, and I'm going to go to the euro dollar. That might not have been the one. Let's see if it was this page. When you're looking for trades, you're not just looking for trades to just make quick money, right? You're also trying to identify, is this trade likely to work? If I put my money on this trade and I put my money in the market, is it likely to reach the target that I'm expecting? Do you even have a target, right? That's the first thing. You got to make sure you've got a target. If I don't have a target, I don't have anything to aim at and I'm not taking the trade. If I have a setup according to my system and I know where my targets are, but I can't tell or it doesn't look like it's going that it has enough momentum and there's enough volume and there's enough participation at the time for me to expect price to hit the target, then I'm not even going to take that trade. How many times have you got into a trade where you thought it was going to go, right? You think you see a bullish move. Let me go to this candle right here. This is the 1 hour chart, and this is the euro dollar, and this is last Friday, right after non-farm payrolls. And you see this bullish candle, and you think, okay, well, maybe it's bouncing off a support and it's going to go back up here to resistance. I used to think that. When I first started trading, I would think, okay, this is a winner, right? There I go with the winner thing. This is a trade that's likely to work. I see a bullish candle off a support. Let's try it. It's got to go back here, up here. Based on everything that I learned up to that point in 2001, when I was trading for like 6 or 8 months of experience only, right at that point, that's all I had. I would read all about support and resistance, and they would talk about these general rules of thumb, right? If it bounces off support, you'd likely expect it to go back up to resistance, but they don't even tell you which time frame it could be on. If you're looking at a daily time frame, well, you could be sitting there waiting for months before something like that happened. But it doesn't always happen that way anyway. And you also have to try to figure out, is there enough momentum and enough participation, enough volume, so that if I get into the trade and I put my money on this trade, is it likely to go to the targets that I'm expecting, that I would normally trade it to? And if there isn't enough participation and there isn't enough momentum, then why get into the trade at all if it's just going to go like this, sideways and flat? You end up expecting more, it doesn't hit your target, and now you're negative, and now you're holding through the weekend, not knowing what's going to happen next. That's an exhausting situation, and it can be avoided. I know how tiring it is because I made those mistakes. I made those mistakes so much and so often, and I lost so much money that I had to figure out a way to gauge momentum and market the volume and the participation that was available at that time. If there's just not enough people to consider taking this trade anyway, and there's just not enough momentum, then it's not likely to hit my targets, and I got to stay out of the trade. So as we were in the chat room, I saw this bullish move, and I saw that it was sort of bouncing off of this little consolidation range right here, off of this support, and it looked like, it might have worked. But again, I could tell that there just wasn't any momentum. This was actually, this line right here, I share some tips that I've learned over the years that help me figure a lot of these things out. They were necessary, right? I didn't know how to figure these things out at first until I just kept testing things. So in the chat room on Friday, everybody's waiting for me to call out a trade, and that's what they're there for, and that's my responsibility. But it's also my responsibility to call out a trade that's going to work. And if it's not likely to work, I've got to explain why. So I was explaining to everybody in the chat room why this one I felt just wasn't going to work. It just didn't look right. There was no reason for me to get into the trade. And I certainly don't want to hold through the weekend. I went back over here to the left and I found a support level that was a very significant support level in my opinion. And it was also a support level that I traded off of on Friday. That Friday that Powell came out with that statement and there was all that internet chatter about the trade war in China. It was a significant support low. And I just simply put it right here in the middle of this. It turned out to be right in the middle of this consolidation range that I was using. This was my range of consolidation. And that support low lined up right there in the middle of that range. I didn't manufacture it. I didn't guess. I didn't stick it in the middle of that range just because it looked good. It was actually a support low. And the market was reacting to it at least temporarily. Now, you're probably thinking, well, I wouldn't know to go back and look back that far. Maybe you don't know how to do that now. But I didn't know how to do that in the beginning either. It was just more and more constant exposure to all of this digging and investigative work and getting tired of losing on my trades and trying to figure out where are the answers. I knew the answers were here in the chart somewhere, technically. It's not always in a book and it's not always in a video. Sometimes it's just you've got to get out there and look because a book and a video can't tell you every case scenario that sets up, every one of them. It's just not possible. There's so many different variables. Like how many people would think, right? Some people would figure it out, but some people don't. Well, I'm not even going to go back that far unless I can actually tighten it up here one more time. So I'll go back. that resistance right there, you'll see how it travels right off of that support low on Friday when I was able to trade that. This was my reversal and this was my Tech 1 trade. And I called this trade out in the chat room. We made a lot of money on this one. So that was the same one that I showed you on the dollar yen when it dropped. So I had 3 trades. I traded the dollar yen, the dollar Swiss, and the euro dollar on that Friday. And we made, I think, we made over 100 pips. I'm sorry, I don't remember the exact number. I think it might have been about 150, 170 pips on that day. Between those 3 trades with these breakouts, possibly. Right around there, 117 I think is what it was. I'm sorry, 117. 117 pips with these 3 trades. That support low was what I was trading off of, and there it is right there on Friday. And it was just a significant support low. It was on a Friday. It made a big move. To me, it had a big impact. So I'm going to open this up and go back to that level. But there's also another strategy that I use called a T3 pattern. And a T3 pattern requires for me to identify a consolidation range. And then when I see consolidation, and if it lasts for a few days, this is a few days, this is a few trading sessions, this is a 1 hour chart. We can see how long this is going. It's not going anywhere for the most part. I put, sometimes when I don't see an old support line, I put a line right in the middle of that range. And then I pay attention to where the candles spend most of their time. And if they spend most of their time to the downside here, it doesn't guarantee that it's going to drop and break through that support level, but it just gives me a heads up so that when I'm visually looking at these charts, scanning for an opportunity, I can either decide, I'm not going to look at this trade because it's not really setting anything up. I'll look at it in a few more hours. Or, hey, this one's starting to look like something. I better start paying attention. I'm going to start writing some notes, and this one's going to stay on my screen, or at least on one of my monitors. And I'm going to wait for the opportunity. And I'm going to type in the notes here on the chart so I don't forget. And then I'm going to put in trade alerts, or price alerts, so that way when something triggers, I can come back to it and I know exactly what this is doing. So I can start to see the trade setting up as it unfolds in front of me. Everything continues to remain constant as I expect it to. If it doesn't, then I just cancel out the trade and I just go, it's not going that way. And I look at another chart. I'm not going to sit here and continue to try to trade the euro dollar if it's not going to give me my particular trade technique, one of them, whichever one I'm using. If it's not going to give it to me and I don't have confirmation, I can't force a trade on this chart. I'll just stop looking at this chart because I know there's going to be another currency pair somewhere that's going to give me the trade. I used to do that quite a bit. I would sit there and stare at one chart, and if I didn't see my signals, this was, again, back in 2001 as another part of this whole experience learning process, I would sit and stare at the euro dollar for a while and no weather chart, and I wouldn't get a trade or a signal, and I'd say, come on, I need a trade. I need to make some money. I would be thinking this stuff out loud and saying it out loud, and then I would just jump into the trade, and it wasn't my technique. It wasn't my system. I didn't understand why I took the trade. I was just bored, and it didn't work, and I lost money. And I was trading standard lots, so you don't want to be bored trading standard lots and just taking trades that are random. That you'll lose a lot of money. I lost a lot of money doing that. So it hurt. It hurt really bad, and it forced me to sit here and stare at these charts day after day, night after night, just month after month and week, until I figured out all of these different things that I can share with you in the chat room. So this was one of the things that I was explaining in the chat room. I see the bullish Tech 1 trade, and back in the day, I probably would have expected, hey, this might go back up to resistance. We might make about 20, 30, 40 pips in here. Let's try it. I would have thought that. But again, gauging this was not all that I used to gauge momentum, by the way. This is not what I used. This wasn't the only thing. This was just one of the technical, visual things that I put on the chart where I said, and I said this in the chat room, if none of these candles close above this resistance, which is a critical support low, in my opinion, on this relative to this time frame, gave me great opportunity a couple Fridays ago. If none of these candles close above that resistance, then this thing's probably just not going any further. I was also watching the dollar. The dollar was doing the same thing. I could see that volume levels were drying up. Non-farm payrolls was already released. We're heading into Friday. Monday was a holiday. Everybody was done, right? Things were going to slow down. And as you can see, one candle after the next just dropped right over, and we stayed out of it. We didn't go long. I explained why, and I explained exactly how to do all of everything that I'm showing you here in this video, and a lot more, because this is not everything that I do. And that's the key. That's the difference, I think, when you're trying to learn somebody's trading strategy. You're not going to get, you may see the setup on one good perfect chart that they picked, but then they're not going to show you all of these other times when it just either doesn't work or isn't lining up the way they showed it in the charts. So you've got to trade day in and day out with that trader if you're going to learn that system, to really learn that system. It's like showing up for work. It's like anything else that you do in life, right? You're taught a certain basic principles, and this is your operating procedure. This is what you do. You maybe don't do it very well at first, and then you keep doing it, and it gets easier and easier, and then all of a sudden you can kind of do it without really thinking all that much. I don't recommend doing that with trading, but you get my point. You get better and better at it the more you do it, and the more you do it with other people that are as good or better than you are anyway. You want to be with other people that are better than you anyway. It helps you bump your game up, and you become a better trader. You become a better anything. So that was the euro dollar. At this point, I don't really have any trades or any signals, but I do have this support low right here. Let me see if I can move that up. This is a clear consolidation range to me. Again, sometimes or very often, consolidation is pretty subjective. For a lot of different people, they see different things. You show a chart. Some people will say, well, I think it's that low. That was Friday. I think it's that high. That is inside of this swing and this swing. And this swing is really obvious to me. Not only that, it's also last week's high. Last week's high and last week's low, or the previous week's low or high or monthly, all of them are important when price approaches it, or I need to use it to identify a consolidation range like this. So I have last week's high and the price swing that created it. You can clearly see it right here. And that's my low. Everything else went sideways. If a 1 hour candle closes outside of this range, I would go to my continuation breakout trade page and use that template with the appropriate indicators to confirm the breakout. These indicators right here, this is a CCI. I dropped this one in here just for visual, right, for divergence. But the Bollinger Bands, Bollinger Bands and bandwidth indicator here, these help me confirm tops and bottoms. So this is my reversal page. So back on Friday when I was looking at this, I was looking at this reversal right here, bounce off of support. This is not my continuation breakout template. These are not the appropriate indicators. Only two of them are, the CCI and the Bollinger Bands. Bandwidth, again, I use it to confirm and help me identify tops and bottoms. I'll talk about that in another video. Really important. John Bollinger, I remember the first time I ever heard him say, if I was to pick two indicators with the Bollinger Bands, I would use bandwidth and percent B, and I would do just fine. That's what he said. He would, like, that would be what he would fall back on if he could only pick those two indicators. And immediately, being a big fan of John Bollinger, I ran out and started learning everything I possibly could about bandwidth. But again, this is the way that I use it. I use it in a slightly different way, right? Because of the way I see things. So if you want to learn how I'm using it, I think it's really important for you to watch me use it every day and then speak out all of my thoughts so that you can hear me process all of that so that you start to see what it is that I'm seeing. I don't have any setups right now with the euro dollar, and it really didn't break out on the euro dollar, and the same thing with the pound dollar. Let me go back to the daily time frame one more time. So I'm going to wrap it up here. I've been going at it for about, sorry for bringing this up, for about 47 minutes here. Pound dollar daily time frame. There was a breakout here. Again, we had a range of consolidation. There's a low. There's the center point high. There's a W bottom right here. And that candle that broke out of the resistance above that resistance point, let's take a look at this. This is a similar setup to the dollar yen, but a lot of divergence. The CCI is printing a lot of divergence. You can see it from the previous price swing range right here. And then on that breakout candle, the Bollinger Bands are not separating away from each other. They're not separating away from each other. So this to me is probably a head fake. And it's likely to reverse and come back down. At this point, it is possible that later on in the week, a daily candle could close above resistance again and then give me 100% confirmation with these indicators. But out of these three indicators, two indicators are not giving me confirmation. So I cannot take this trade. I would not take this trade if price jumps up, takes out the high, because I would expect some kind of a pullback after that, if it does that. So I would go, this is the daily time frame. Again, it doesn't mean that it's not going to break out and trend to the upside. That's not what it means. It just means that this is likely to experience some kind of a pullback or head fake altogether, and I don't want to sit through a pullback. I'm going to wait until I get a solid, clean breakout where it trends and moves. Let me show you a clean breakout. I'll show you an example. We talk about this every once in a while with the pound yen. Let me go to the daily time frame again. This is the daily time frame. This is a good, clean continuation breakout trade. I traded this with my chat room subscribers and some of my coaching students. This is the pound yen. This is the daily time frame. That high right there goes all the way back to February of this year. That center point high goes back to about March this year. And then right here, this range goes from March and April. This was a continuation breakout trade right there outside of this consolidation range. The structure is the same whether it's on the daily time frame or the 1 hour chart. The structure and the basic entry. Some of the indicators, the CCI set at a different setting. You also use different stop loss and targets, of course, but the structure is still the same. This was an IMP crown pattern. I teach how to trade and how to identify this IMP crown pattern. And when I see an IMP crown pattern like this, I know that price is likely to go where I expect it to based on, there's a few things going on here, and we talked about this on Friday. There's an IMP crown pattern, which is basically a head and shoulders pattern. The IMP crown pattern lets me get in a little bit earlier than waiting for the neckline break. The other thing that the IMP crown pattern forces me to do is identify the new A high and B low, so that A, B, C price swing. It's a method that I use over and over again, regardless of which time frame it is, the 1 hour, the 4 hour, and the daily. So the way to find the most recent A high is to go back to where the trend shifted. So you can see here, over here to the left, we're in a downtrend, and then the trend shifted and made an uptrend. It pulled back a little bit, and then it continued, and here was the high. Up to that point, I didn't know, when price was moving sideways through here in March and April, the beginning of April, I didn't know for sure that that was the high. But that's all I had to work with. And every day I came back to this chart and I did a little more work and watched these candles each day that one of these candles closed. This was a daily time frame. We had an A high, a B low. I drew my fibs from the appropriate A high. That's the other thing that I see a lot of people do. They put their Fibonacci tool in the wrong location. I teach you how to do it the way I do it. Again, this is not the only way, but it is the way that I do it, and it produces results just like I'm about to show you. And it works the same way on the 1 hour chart or the 4 hour chart. So I had this A high, B low, then I drew my Fibonacci tool, and I was able to watch and gauge the depth of these retracements. It doesn't mean that I don't have any trades in here. I did intraday, some of these short-term trades in here. But this was a daily time frame again on the pound yen. So from the pound yen, looking at the daily time frame, from that perspective, this was my consolidation range, and I saw the 618 retracement, and then I saw it retrace and retest again to the 618, and then it pulls back down, still doesn't take out the B low, still more consolidation. This is just consolidation to me. If I'm going to trade the continuation breakout trade, I do nothing but wait for the breakout. And there was no breakout here on this time frame. The way that I do it. Remember, looking for the appropriate A high, B low. And then it bounces around, hits support, goes back up one more time. It doesn't break below support. It did not break and close below that B low. Remember what I told you about the continuation breakout trade. It has to close below that B low, not bounce off of that B low. That's not what would indicate to me that price is likely to trend in a downtrend, in a continued downtrend. You can see that it was in a downtrend for about a week or so in here, but that was just as it headed right into that support low and then bounced. So there was another retest of the 5-0. So we get a retest. There's C, right? There's actually a first test, right? It pulled back from B, went to the 382, hit the support low again, went deeper to the 618. That's a common pattern. That happens all the time. We see people try to trade off of the 382s, and then they get trapped, or the 50, and they get trapped because it doesn't go any lower, and then they hold on too long, and then it goes back and retests the 618. The 618, in my opinion, is better to trade off of, but you still need more confirmation. I wouldn't just jump in just because you see the reversal candle at the 618. And again, you can see how long it took, right? You hold on maybe a little bit too long, but you don't get stopped out. It's just a retest. Then it bounces again, and another retest, and then it closes below support. That's my continuation breakout trade below that B low. This was the range of consolidation. All of this time, I left the Fibonacci tool here at that high and that low, identifying the depth of the retracement, which was just to the 618. These are my extension targets. I had these extension targets sitting here long before the breakout. I didn't know which direction it was going to break out, but I left it there because up to that point, everything held with this last A high, B low, and everything was confirming and staying within the structure of this IMP crown pattern and the consolidation for the continuation breakout trade. The structure remained intact for this whole thing. I didn't know what was going to happen, but it didn't matter as long as I kept following it, and I do the same thing with the 1 hour time frame. So here, again, before I even get the breakout, I leave my markers in here. I know where my extension targets are if this is the depth and this is as far as it goes on these retracements. So again, it finally breaks out at that range. And again, the same thing works on the 1 hour chart. From the entry of 142.97, which is where I called it in the chat room when this happened. On this day, that was in the beginning of May. When this happened, it took about a month and a half for it to actually drop all the way back down here. And we talked about it just about every day. Some people in my chat room do like to trade off of the daily time frame. So I teach them my strategies as they apply to the daily time frame. But most of us in there are day trading, and I'm getting in and getting out usually within, the London and New York session, and it works just the same. If this was a 1 hour chart on the pound yen, we would be earning 250 pips. This, again, 140, let's just call it 143. 143 on the pound yen. The final target was 135.50. That is one hell of a trade. I can tell you that. That's just 300 points just from the first target, or just to the first target. That's a big trade. I'll take this out real quick. It bounced. We talked about it. Bounced again. Hit the last target. And then at that point, I said it's probably going to take out the February, the beginning of the year low, which was January 2nd. Sorry about that. That was the annual low. And then it ultimately took it out and just kept going. And now here we are reversing at this point. So the continuation breakout trade works. It works on all time frames, but nothing less than a 1 hour chart. Don't do it on less than a 1 hour chart. If you want to learn how, get in the chat room. I'll teach you. If you want to go deeper into my strategies and learn more, you can get into the online trading course. Euro dollar. I don't know what to do with the euro dollar at this point. It looks a little bit choppy to me. I see what's going on here. It looks almost like a T2 pattern to me. And if this is going to continue after this pullback, this is what's possible. I'm not saying that it's likely, and I'm not predicting anything until I have confirmation. But with this reversal right here, if I was to trade this back up and it would look like a T2 pattern, that's another technique that I put together. This would be the target right back up here at about this area, which is the 1.1160 area. And we're right now at 1.1020 area. So if this holds and then it prints a bullish move and this trend continues higher, that would be my first target, is the price swing high here at 1.1160. That would be my profit target. I don't have confirmation that this is going to go higher. When I do get confirmation, which would be some kind of a bullish move that I can confirm here on the daily time frame, then I would keep looking for opportunities to trade the euro dollar higher. Right now, it just looks like it's probably going to retest lower levels, and you can see that playing out here on the daily time frame. This was, I believe, the chart that we're looking at. Euro dollar. Yeah, euro dollar 1 hour chart. If it's going to experience more retracement, lower levels, retesting lower levels on the euro dollar daily time frame, then I would expect some kind of a continuation breakout trade here. Remember, if we get a 1 hour candle that closes outside of this range on the euro dollar, if it doesn't confirm with the Bollinger Bands, then it's not a confirmed continuation breakout trade, and it could be another head fake, and it could maybe move down a little bit lower and go right back up again. And that wouldn't surprise me based on the way the candles look on the daily time frame, to see more choppy, unpredictable, unreliable movement, which means, again, that it could be a continuation breakout trade, but no confirmation. It'll move a little bit lower, go back up. If that happens, I would then take my support line and put it right at the very last new low that it makes, and then leave it there. Let's just say, for example, if it stopped right around that range. So I would have this week's high and this week's low. If this week's high doesn't make a difference, then I would use last week's high and this week's low. Whatever that looks like. It hasn't set up just yet. I'm just giving you a few ways to protect yourself if you see it. But again, if you're in the chat room, I'm going to show you what that looks like anyway. So that's it. I really don't have any trades setting up at the moment. I mean, I see this little bounce here on the euro, pound dollar, dollar yen. I would rather not trade anything just yet. It looked like all it did was just filled this small gap on the open. And it might go a little bit higher. And I'm not, that to me is just scalping. That's just a small trade. I probably won't have any signals until the London session. However, I do want to warn you that on many instances, on many occasions with the Monday trading session, I don't get solid signals on Monday. If there was one day out of the week that I don't usually get signals, often it's Monday. Not always, but often. It's just like a slow kind of let's get back to work kind of thing, that kind of vibe. You can see volume, momentum. Nobody really, there's not a whole lot going on Monday. Often, not all the time, but often. And so sometimes you hear me say it's a typical Monday, and things sort of go sideways. So don't expect any trades in the chat room. But if we have them, I'm going to call them out. That's for sure. So again, I don't want to take any trades. I'm going to be gauging, the possibility of some kind of a momentum, kind of like what I showed you with the euro dollar, how I was gauging those things and trying to identify, is there enough participation in the market at that time for me to justify putting my money on a trade and holding on to it. All of those things are some kind of have some kind of a effect on your trade one way or the other, or your decision to either take a trade or stay out of it. And that's a really important lesson to learn. It took me a long time to figure that out. I understood the concept, but I didn't have rules for it, right? Things that would keep me out of trouble. So that's it for the weekend update. I apologize that it's so long. It kind of turned into a little bit of a learning lesson here. It's exactly 1 hour. I'm sorry about that. Usually these things are about 20 minutes, but I felt that it was a really good opportunity to explain what was going on with the continuation breakout trade on the euro, on the dollar yen, and to also show you the Japanese yen futures. I think that's a great opportunity. Before we leave, though, I did say that I would show you the side-by-side view. So over here on the left, I have my Japanese yen futures chart, and over here on the right, I have my dollar yen chart. So if I was to trade this, let's say I was to trade this off of a 1 hour time frame, 1 hour chart, and I'm looking for a breakout or a trade to day trade, I would use them both on the same time frame and look for the same pattern. The pattern here first in the yen futures with volume, whether it's a high or a low or a breakout. I'm going to be paying attention to that indicator, and then also the other indicators that I use for specific trade techniques like reversals and things like that. But again, side by side, I would set up my charts just like this. You can go to TradingView and you can set up Japanese yen futures here on the left and the dollar yen on the right. You can do it on a daily time frame for both. I wouldn't, you've got to do it the way you're comfortable with, but that's the way that I would do it for sure. And it is so much more comforting knowing when I get into a trade on the dollar yen that I have all the confidence in the world that I'm taking a trade that makes sense here, that I can see where it is relative to highs and lows. Is it oversold? Is it overbought? Is it a reversal? Is it a breakout? Is the rest of the market trading it? Is there volume behind it? There's just so much information here on this chart. It's incredible, and it's such a great feeling to know that most of my trades on the dollar yen are going to work. You can do the same thing with any strategy that you use. Just try it out and see how it works for you.